please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, we had a big day yesterday. A lot of it was short covering. There was some buying as well, clearly. This morning is a bit of a flat start for our market. Ashwani Gujral, Mitesh Thakkar and Prakash Gaba now join us. Good morning, gentlemen. Ashwani, thoughts on the index? Is this a market that you would want to buy on a flat opening, or would you want to wait for a 20-30 point dip?
Good morning, Anuj. Yesterday, Nifty outperformed the Bank Nifty. Now, let's see if today that situation gets corrected, because the Bank Nifty didn't rally as much as was expected. So if we get a good opening on the banks, probably we'll chase on the banks. But Nifty, I think you should probably wait for 10,160, 170 on the Nifty futures. Bank Nifty, I would like to see the pre-open, but overall it appears that from a sell-on rally, the market yesterday has turned to a buy-on-dip type of market.
Okay, and good morning, Ashwani. What are the levels you would watch out for on the Nifty Bank? What is that opening which you would chase, and what is an opening that you would not chase?
See, if it's a flattish kind of opening, then you don't chase it.
Okay.
But if it's a strong opening with HDFC Bank and ICICI Bank showing follow-through, that is the sort of opening you would like to chase, because the Bank Nifty should have participated more in case we didn't have the Thursday expiry. So that's a situation that I'm looking for. If that doesn't play out, then on dips, you have to buy the Bank Nifty around 25, 100, 150. That is a zone for the Bank Nifty futures. But overall, the idea is to buy, whether on a gap up or on a decline.
Okay, Mitesh Thakkar and Prakash Gaba are also with us. Let's get them on board. Mitesh, morning. Would you buy the Nifty and the Bank Nifty today?
Good morning, Sonia. Yesterday, we were trading with short bias. Still, the Nifty managed to get back about 10,125. So I think 10,120 was an important level. Now that it's been crossed on the upside, my sense is that we should not go short unless until we start breaking below that. So buying on dips is what I think I would possibly look into. Buy around 10,150, 140 zone, keep a stop below 10,120, and 10,230, 250 on the upside could be the target of this pullback to begin with. And if it starts getting past that, then we'll look at higher levels. The one thing which is important on the Bank Nifty is levels of 25,200. I think a lot of the banks which have slightly underperformed will come into play if we get past those levels. So I would want to see the Bank Nifty get past 25,200 and then go long there.
Fair point. Thanks, Mitesh. Good morning, Prakash. Your strategy?
I think Nifty seems to be having a support closer to around 10,100, 125 zones. So we get dips until those zones. I think those are buying opportunities. The target that I have on the upside is around 10,260. That's a stiff resistance. If it goes there, likely to find some kind of a resistance there. When you look at the Bank Nifty, looks like it has some kind of a support out here, closer to around 24,950 zones. As long as it holds, maybe we can see an upside to around 25,200. That's a crucial level to watch.
Okay, let's discuss individual stocks then. Ashwani, what would be on your buy list?
Well, NCC is a buy with a stop of 118, target of 130. Tata Global is a buy with a stop of 278, target of 294. DLF is a buy with a stop of 235, target of 242. KEC is a buy with a stop of 338, target of 360. And Voltas is a buy with a stop of 610, target of 645.
Okay, so that's all buys. Mitesh, you going with all buys too? Mitesh, you need to repeat that.
Yeah, I said majority of calls on the buy side, only one on the sell side. I think clearly a lot of stocks turned trend on the short-term charts yesterday. So I have a buy on Britannia, which is broken out on the intraday charts. Buy with a stop at 48.50. Look for a 50.75, 5100 kind of target. Idea was a buy yesterday as well. Even today, I think the chart pattern suggests that there will be stronger upsides and 103 could be tested. So buy with a stop at 95 there. M&M Finance, highest ever closing, a swing breakout. That's a buy with a stop at 448. Look for 470 as your first target. And my entry is the final buy call, which I would want to see the stock price get past 558, 559 levels. It's close, very close to those areas. So buy above 560, keep a stop at 549, look for 585 as the short-term target. And one sell call, Cipla, again a conditional sell. If it breaks 590, sell with a stop at 604, look for a 565 kind of a target.
Okay, so that's a sell call on Cipla. And Prakash, what about you? I
have buys, Sonia. I'll start with Adani Enterprises. That looks like a good base formation and up move has started. Can climb to levels close to 155, stop below 143. Hindalco looks like a good short covering up move. The short covering could continue up and maybe we can see it targets closer to 245, stop below 233. L&T did show some good sideways consolidation, up move has started. Possible target on the upside on L&T is 1250, stop below 1203. And finally UPL, what a move that we have seen yesterday. That should continue up. Looks like it's bottomed out. The target on the upside is around 750 zones. May take a day or two for that. Stop below 700.
Okay, Ashwani, interesting that you don't have a gas stock on your list today because yesterday we had a phenomenal move in all of these led by GAIL.
Those were yesterday's calls, right? Today others give them.
Okay. So you pass? So nothing on GAIL today?
See, obviously it's a buy on dip type of outperforming stock. So definitely if you get the opportunity you should buy. But I'm very interested in UPL because that almost went into a bear market and from there it's turning. So gas and gas related will outperform. So try to buy on any sort of dip.
Okay, well, yes, UPL fell from almost 900 all the way down to 680, and now it's making an attempt to recover.
Which is what happens with the stocks which get into the Nifty, Sonia. That because before that they see a huge rally. After Nifty inclusion, there's quite a bit of correction. And then after that, they resume their rally.
On CNBC TV18, the SGX Nifty is absolutely flat, but we have some good tidings from across the Asian markets. Most of those markets are hanging on to the green line, especially markets like Japan and Hong Kong, up about 0.5 to 1.5%. But gas companies have been buzzing off late. In fact, MGL is the stock on our radar, Mahanagar Gas. It's had a great ride in 2017, up about 50-odd%, and the market cap of MGL now is more than 11,000 crores. Rajiv Mathur, the MD of the company, joins us to talk about that. Mr. Mathur, good morning. I just want to start by asking you about the volume growth for MGL that we can see in FY18, FY19, because analysts are expecting the industry to see a double-digit growth of around 10%.
So we have been doing historically between 6 to 7% compounded annual growth in terms of this year, also with those kind of numbers. Our effort is to increase the penetration levels across Mumbai and adjoining areas, and we are confident we should be able to maintain a CAGR about 6 to 7% in the following year also.
Good morning, Mr. Mathur. Is there any price hike which is likely?
So our gas prices are set twice in a year, which is in April and October. In October, there was a marginal hike in the prices of both PNG and CNG. Depending on the input costs. We have no reason whatsoever to change the prices unless taxation or other compulsions lead it to that increase. And till March, we probably will have the same prices otherwise. And they, as you know, are at a discount to diesel as well as petrol. And in the PNG sector, they are about 5% discount to subsidize LPG today.
All right. Well, yes, they have other advantages over petrol and diesel. We take that. You had guided for an addition of 20 pumps in FY18. Is that on track?
So we have, as on date, about 206 CNG stations in Mumbai and adjoining areas. Our effort has been to add at least 20 stations on an annual basis, and this year we are very much on course. By end of this month we should have at least 11 or 12 new stations in operation, and we expect during the course of next 3 or 4 months we should be close to, or we should be able to achieve 20 new additional stations by end of March this year.
Okay, that's interesting. What is the penetration level for CNG and PNG in the areas that you guys operate in?
So we have been able to connect about 10 lakh customers by now in Mumbai and adjoining areas. The population of the entire belt is about 2 crores, which amounts to about 50 lakh households, of which our belief is that about 15 to 20% are not doable because of safety reasons, because they are either slums or chawls or areas where we cannot take the pipeline in. Therefore, that leaves us with about 30 to 35 lakh houses to be connected. As I said, we've done about 10 lakh by now. So the penetration is around 30% or so, and we hope as we go along, we should be able to penetrate and connect all the houses in the course of next couple of years.
Okay, and is there any increase expected in commission to oil marketing companies, and will that impact your margins?
So depending on the consumer price index, the inflation and the cost of labor, etc., there is a natural rise on an annual basis. We are in discussions with the OMCs, and there's going to be a marginal increase going forward in the discount of the commission rate that they are given. Our understanding is that we should be easily able to carry forward whatever rises there, and that may not lead to any impact whatsoever on our margins per se.
Okay, thank you very much, sir, for joining us with your thoughts today. That's Mahanagar Gas, and of course all the gas stocks, in particular GAIL and Petronet LNG, have seen a lot of rally, and yesterday, of course, GAIL was the toast of the Nifty, as it were. Harshvardhan Dole of IIFL, an analyst who tracks this very closely, has joined us on the phone line. Well, on this and other stocks as well, but Harshvardhan, first on the gas stocks itself. GAIL, Petronet and MGL, which would you bet on?
Well, I think the entire gamut of gas stocks, the 5 stocks that we cover, that is Petronet LNG, GSPL, Gujarat Gas, IGL, Mahanagar Gas, all are in sweet spot. Essentially, their input costs are expected to be benign. Their product prices are at a discount to alternative product prices by a margin. And therefore, there is a compelling economics for sustaining volume growth. And what makes the case even more interesting is there is no pricing cap or, per se, quasi-pricing restrictions as it existed maybe, the perception existed maybe a few years ago. So all the headwinds which industry thought have not got converted into tailwinds, and these companies are in sweetest of the sweet spot. So over the next maybe 3 to 5 years, I think the earnings growth should remain strong, especially for the city gas distribution companies. And to us, that has got well reflected in the price to earnings multiple of most of these companies.
Harsh, there is another report which I was reading, which is actually questioning whether the rate of growth, for instance, of IGL can be what it was. There the advantage also was in Delhi, the transport system shifted from, other fuels to CNG. In Mumbai, there was an expansion towards Navi Mumbai. All these advantages will not continue. So can you proceed on the assumption that MGL and IGL will have the same pace of growth that they had in the last 5 years or 10 years?
So in fact, one should not compare the last 10-year growth versus the next 2 to 3 year growth, because firstly, these companies were in high growth phase. The penetration of CNG and PNG was abysmally low, and therefore the pace of growth was significantly higher. Now here on, the growth will be driven by foray into new geographies, and it's well-known fact that the PNGRB, which is the sector regulator, is keen to auction out almost 200 cities in next 3 to 5 years. Now that is going to be key as to how of those 200, how many of these 2 or 3 companies are able to get and successfully grow. But having said that, I don't see the organic volume growth, that is the growth from existing areas, declining materially. The growth rate may taper down to maybe mid single digits in the existing area, but the growth potential definitely exists from adjoining areas where these companies are keen to expand their operations.
Okay. Just one word on Petronet LNG particularly. I mean, the stock has seen a 40% rise this year, and even the quarterly results were exceptionally good. What would your target price be on Petronet LNG over the next 12 months?
Our official target price for Petronet is close to 315 rupees. And we think it's a good, compelling buy on rising LNG imports in India. Its capital cost is one of the lowest, and it's one of the most efficiently operated LNG terminals in India. Considering the fact that it's placed at a time, or rather it's ramping up its capacity at a time when demand is kind of bottoming up, we think that next 2 to 3 years will actually end up being very good for Petronet. The debt-free balance sheet, fantastic management, and the valuations are at a significant discount to some of these gas stocks.
Harsh, since we have you with us, we also wanted to squeeze in one more question on what the power minister said yesterday, that he's actually looking at a mandatory power for all by March 2019. Are you taking this very seriously, this promise? Is it feasible?
So definitely it is feasible and achievable. But for that, I think there has to be a seamless coordination between the center and the states. And one must appreciate that the finances of some of these state utilities are not that great. And on top of it, with farm loan waivers given by some of these states, the state fiscal is not looking that great. So, I would not rule that out, but I think there has to be a seamless coordination between center and the state. And I would think that some states which are in really bad situation, say like UP or to that extent Rajasthan, a marginal change can actually be seen quite positively by the, not only by the state, but generally by the population, because the quality of services is so poor that even in the capital cities of these two states, you have almost 4 to 5 hours of power outage. So if even in these visible capital cities there is a marked improvement, I think sentimentally that could be seen quite positively.
Okay. Well, so because of that, are you going to buy any of the power stocks? I mean, after all, what is the bane of most of these power stocks? Nobody is buying the power they are generating. Will they be able to, or does it look like only at a big power cost cut?
The investable stock universe, or other investable stocks in the sector, have shrunk considerably. And the way we look at it, the companies which have got solid balance sheets are the companies to focus on for the next 3 to 5 years.
Which are?
Which are, just barring 4 or 5 companies, which is the 3 PSUs, NTPC, Power Grid, NHPC, followed by CESC and to an extent JSW Energy. I mean, spare these 5 and there is a serious balance sheet issues for the rest of the pack. So, although the sector seems to be bottoming out, the plays which are, associated with stable utility earnings are just, limited to these 5 stocks. And then the other ones, most of the other private utilities, we are actually dealing with them very cautiously because there are several company-specific issues which they need to, kind of firstly address before they are geared to, do some additional capital expenditure and growth thereof.
All right, Harsh, we'll leave it at that. Thank you very much for joining us. So, well, the minister's announcements, if true, is good for consumers, not yet for investors, from what Harsh is saying.
Okay, let's move on then. Manisha Gupta now joins us for a quick roundup of the commodity market action. Manisha, good morning.
Morning, Anuj. Thank you so much for that. Well, the major cues really are coming in from the US dollar, which is at 2-week highs, is up nearly 1% on this week. And the markets are now awaiting the US non-farm payroll data, where the expectation is of that there is a job build-off of 1,95,000 in the month of November, and that really has been supportive. And then apart from that, you have the US Fed meeting coming in on 12th and 13th of December, and that is, of course, a major event to watch out for before this year ends. So that is what is keeping that space on, and that is puts some pressure on many of these commodities, starting with the gold and silver, and they have put in a dismal performance really for this week, down 2.5% for gold prices, 4% shaved off from silver, and you are looking at 4 to 5 month lows for both of these commodities. And then add to that the fact that there's no physical buying coming in for the Indian and Chinese market, and that's pulled it down too. In the metal space, the only bright spot has been copper, which has seen some opportunity buying. But when you look at aluminum, that one is trading at a 4-month lows. Lead prices fell 3% overnight markets. So when you look at the metal space overall, it really isn't done so well in this week especially.
All right, thank you very much for that, Manisha, to give us all those fundamentals in the currency and commodity space. Well, let's get to one important meeting that happened yesterday. The Federation of Indian Chambers in Commerce and Industry, that's FICCI, met the Finance Minister yesterday to suggest some pre-budget tax proposals. Among them were also a discussion on the impact of the US tax bills on India. Dinesh Kanabar of Dhruva Advisors joins in for more. Mr. Kanabar, good morning. Well, first up, was there a discussion on the impact of the US tax bill, and is it something the Finance Ministry should be worried about?
So first, let me just correct that the meeting was with the Finance Secretary, not the Finance Minister. It was a fairly extensive meeting, almost 2 hours, and a large part of it was focused on US tax reforms and how does it impact India, and what does India need to do in the ensuing budget. And Latha, if I have a couple of minutes, I can just explain to you what are the salient issues out there. So first is we are looking at suddenly USA coming up with a tax rate of 20%, a corporate tax rate of 20. It might be 22 ultimately when it gets passed out. Of course, we will be awaiting that. But if USA is going to tax corporates at between 20 and 22%, and India is going to be at 30% with partial 25%, are we really competing on the tax base? So the entire discussion yesterday moved away from a demand by corporates to reduce rates of tax for their, so to say, personal benefits, to go and say that what is it that is going to make India competitive. There are other more important issues beyond the rate of tax. USA, for example, is proposing either to levy an excise duty or a minimum alternate tax on all the remittances that go out of the USA. And that is going to make India less competitive. So every payment by US to India, or for that matter to any other country, is going to be subjected to a tax, which tax is not creditable in the home country and which is going to increase the cost and make other countries non-competitive. Now, obviously, this is consistent with President Trump's own thing of how things should be made in USA, how services should be sourced from within USA, and this is a vital step in that direction. I haven't seen really anywhere in India or USA much written on this space, but as we read those provisions, it becomes stark that India needs to realize what's happening out there and put its own formulation out there. And finally, while India is trying to tax global profits, so for example, we have introduced issues like OEM and things like that, the USA is moving to territorial taxation, where it is saying only the profits which are taxed in USA will be subjected to a 20% tax. Other profits will be taxed on a de minimis basis, encouraging corporates like Apple and others to really get the profits back. Now, this also is going to have an impact on India, because many of the large US corporates have captive sources centers in India, employing hundreds of thousands of people. There are huge cash accumulations here, which until now stayed in the country, either for capital use or for whatever else. Now there will be an incentive to get them back into USA, because there's going to be sort of a one-time immunity for all the past accumulations. So quite a few things out there which we need to be conscious of.
Okay, Mr. Kanabar, morning. I just wanted to come back to the first point you made about the possibility or the talk that was made on, bringing the corporate tax rate down. What's the sense you got from the Finance Secretary with respect to how much the corporate tax rate could be brought down, combined with how much the tax incentives could be phased out, and what are the incentives that perhaps could be phased out as well?
So really there wasn't any commitment or sort of a proposition yesterday to say how much will it go down. We are all aware, for example, that the Finance Minister has already on the floor of the Parliament mentioned that he proposes to reduce the rate of raise to 25%, and that has happened, but for very limited aspects. So for manufacturing companies, for startups, it's 25%. almost 80-90% of the folks pay at 30%. So there was a recognition that that's the bare minimum where things have to go down to. I repeat, there were no commitments. The discussion did not really go down that part. But really, that was the point which was being made home. But as I said, the more important thing was that instead of being a self-serving demand by the industry to reduce the rate of taxes, the discussion was more to say, if India has to be competitive, what does it need to do?
Okay.
Coming to the question you asked on incentives, today, barring AT, IC, there are no incentives which are left. There again, sunset provisions have already been announced. So therefore, that's the only thing, and there is nothing else which remains really.
Okay. Well, point taken, Mr. Kalabar. Thank you very much for placing all those arguments on the table. So the Indian corporate sector now asking the finance secretary to take on board the amount of tax cuts that may come in the United States. The United States also is going through a big debate, and yesterday we had Alan Greenspan saying that this kind of a deficit can't be tolerated. And actually, I mean, if you cut taxes so much, in fact, later on this week or next week, US government is in danger of actually coming to a standstill because they are crossing the deficit limits. So this is something also that we have to, can all the 183 countries start competing with the United States on tax cuts? I don't know. And I would certainly protest as an individual if I'm taxed 33 and corporates are taxed 25. That's not fair at all by any standards.
Absolutely. That's the long-standing debate, right? Why should we pay more than corporates?
No, I don't mind being paying. I think citizens in a poor country must pay more because we have a social obligation much more than other countries. But corporates better pay.
Okay, well, let's get back to some of the stocks that could be in focus this morning. Jet Airways has posted a very weak set of numbers this time around. In fact, the profits dropped almost 90% and there was a huge dent in the margins this time. Let's find out what went wrong. Mayur Milak of India Nivesh Securities joins us on the phone line. Mayur, good morning. The stock has done exceptionally well, but you can't say the same about the results. How do you approach it here on?
Yeah, hi. Good morning. You know, I think, yes, the stock has seen a lot of steam in this past, but definitely these results are not going to support the rally that we've seen. So you do expect some kind of pressure on the stock.
Mayur, good morning. You know, of course, these are backward-looking numbers. In the last presentation, they spoke about reducing costs going forward. Do you think the market will take cognizance of that, or do you think the stock needs to be punished considering the kind of rally that we have had?
I don't know, punish is the right word or not, but yes, you know, so we attended the analyst meet. Frankly, yes, the management did speak a lot on cost initiatives, but I think most of them were planned in 2019 and 20 onwards. So in the near term, in fact, what is more challenging is if you really look at the crude prices. If I have to compare them compared to previous quarter, you already seeing a 10% jump in cost. So I think in the near term, they will definitely have a lot of challenge really maintaining profits. And you should definitely see that adding a lot of pressure on the stock price. What would be a price you would be comfortable with? I don't officially cover Jet Airways, so I really wouldn't know the price. But yes, I think if I really look at a peer comparison to, you know, Indigo and SpiceJet, while I see the, you know, Indigo is now entering into the regional connectivity, and SpiceJet would probably start seeing a lot of cost benefits coming its way through the long-term arrangement deal that they've finally got. I don't really see any of that trigger into Jet Airways, and that's why I'm not sure why anybody would want to play Jet Airways for the domestic growth story.
Okay, Mayur, thanks a lot for giving us your quick thoughts. That's Mayur Milak of India Nivesh Securities. We'll also get some more gentlemen on board. Mehrbun Irani of Ginny Gems Consultants is with us to give us some of his own stock ideas. Mehrbun, good morning and thank you for being with us. Before asking you about your own picks, just a quick word on Jet Airways. Do you also believe that, you know, the market is going in with a positive mindset, so perhaps these numbers would be overlooked?
No, I would say the numbers will definitely have a dent in the stock. I think people had been positive. I personally, after so many years, had started turning positive on airline stocks. And if you see the growth as far as air traffic goes, you cannot ignore it. I think what market likes is direction. And directionally, people know that airline companies will do better. Therefore, I beg to differ with the gentleman. I personally believe, yes, there will be a dent in the stock. 690, 700 can become once 640 or 650. But will I buy into that stock? That's what I heard Latha asking the gentleman. My personal view is, yes, I would buy into it. Now the question is, what do I buy in airline stocks? Should I buy Indigo? Should I buy Spice? Or should I buy Jet? My preference was Spice at number 1, Jet at number 2. But if you give me a Jet at maybe a 630 or a 640 today, a 10% fall because of the numbers, I would possibly pip in favor of Jet at number 1 and Spice Jet at number 2.
Okay, yeah. Actually, even Ashwani was making the point. They have almost become now like consumer stocks, you know, discretionary consumer stocks. Irrespective of the price, there is an audience or a customer base waiting to take advantage of that service. Mehrbun, well, the other set of stocks that have been soaring, actually many sectors have been soaring, is realty. We've seen a big jump. Is there anything in that space that you like?
I think I was asked this question 3 years ago on this channel, and I have never favored realty stocks. But to a question asked, I had said I like a company called Podar Housing. The stock did nothing, but the stock has suddenly attracted attention. I still believe in the stock. I still believe in the company. They don't have any sort of leveraged position, and they are one of the most efficient, affordable housing company, with 88 acres of land and planning to develop, monetize maybe 5 billion rupees worth of assets by FY19, and setting up 12 affordable housing projects over the next 18 months in and around Mumbai. I think everything augurs well for this company. The stock has attracted traction in the market. The liquidity is slightly poor. But personally, I was expecting the stock to be a 2,000 rupee stock over the next 1.5 years. Went wrong. Because the stock did nothing, but of late the stock has shown move, and I continue to say that this stock should be at least a 2,000 rupee stock over the next 6 months or maybe a year.
Okay, that's interesting. Podar developers, I think we're discussing it for the first time. Mehrbun, good morning. Is the time right to buy Bajaj Finance after the kind of correction that we have seen? That's something a lot of people are asking. I
think one of the best managements in this country in this space. As far as delivery goes, you can't question them. Management looks supremely confident. The question is the valuation. But the fact remains that this space should attract favorable attention of the market, and every dip could be used as a buying opportunity. But in the same breath, I would like to state that if the market corrects for whatever reason and the stock is available at 1,500, it's difficult to defend the valuation. Disclosure, we are invested in this company. We know the stock is expensive, but certainly if you're asking me, can the stock be 30-40% higher over the next 12 months? My answer would be yes. So maybe a 50-100 rupees further dent or further correction in the stock price at least would not earn me and my investors. But at the end of it all, I would say yes, this is a stock to look at favorably if you get it maybe at the present price or maybe 50 rupees or 75 rupees further lower.
Okay, the other stock that you like is Praj Industries, but if you pull up a 2-year chart, you'll see that it's done nothing for 2 years, but it's had a good rally over the last, say, couple of months. More on board there?
You said it correct. I think this stock has been an enigma of its kind. I think virtually everybody, including me, had recommended the stock over the last many years, and the stock did nothing. But if one understands the ethanol industry, one understands that the pricing by the CCEA has been hiked for ethanol. You see the OMCs now virtually trying to set up plants and trying to expand capacity. You know the government stance is trying to curb imports. So Praj being a leading player and having tied up with, I think, BPCL and IOC, I virtually believe that traction in the domestic business can only increase further. As far as the international business goes, the company is doing quite well. The company has cash in the books. Balance sheet is super. And with business virtually now showing signs of picking up, I expect the second half to be much better than the first half, which itself was good. So a company whose earnings are improving, I think the stock, which is attracting attention now, which has moved up a little sharply over the last few days. I really don't know how the stock will move the next 3-4 days, but certainly this is a stock which can be a 150 and above stock over the next 1 to 3 quarters.